Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, August the 26th. The year's 2021. Let's talk trading. Trading evolution with Walmal. These videos are for educational purposes only. Your results may differ from mine. Walmal, we were talking earlier, and I was saying, hey, it might be fun for the boys and girls to, and fellow, and the non-binary traders to hear about our trading evolution. You know, we've been talking on the phone for almost, a year and a half or so. And, how have your charts changed from like before you started talking with me till now?
Yeah, there's been a lot of things that have changed since then. As you know, in the very beginning, I had a set dollar amount that I wanted to make every day. That's increased. I had a set number of pips I wanted to make every day. That has changed. So there's been a bunch of things like that. And in addition to that, my charts. You challenged me. Go look at a template. From 2 years ago. And I looked at this thing and it was like, oh my gosh, look at all that junk up there. And one of the biggest transitions is that, I got, in fact, let me just do a control I on my chart right now, so just to go and just for giggles to go and see how many indicators I got. And I got 1, 2, 3, 4 indicators on the chart, and that includes having your indicator that goes and changes the time frame and the pairs. It's changed dramatically since then. I've simplified a lot of things. Now, I'm going to say all of that, and I'm going to go and say something that I'm glad back then I did have all those indicators on there, because I think what those indicators have done for me is it's trained me. It's sort of like, you got your training wheels indicator. It trained me to go and look for certain conditions in the market. And now what happens is a lot of times I don't have to even go and have the indicator up there. I've gotten trained because the indicator would say, hey, this is happening right now. Now I can just look at the chart and say, hey, this is happening right now. And it'll give me a good idea of what I should or shouldn't do. And I think that's the biggest thing that's changed in the last, I think we started talking actually in January of 2019. I mean, a long time ago, and 2019. And so it's been a long time. No, 2020, I'm sorry. But it's been a long time, and a lot of things has happened. Now it's funny because my charts, I looked at some of my other templates, and as you went and developed new indicators over the year, I'd throw that on just to go and play with it and see how it reacts, and and those type of things. But they really didn't. It actually, I think, helped me as well, because it helped me evolve, because what I started to see is that, a lot of these indicators that you write, they may be based on some new premise, some new idea, some new observation that somebody may go and, send you a quick email about or something like that. But what I started to really notice is that these things based on the way I trade, a lot of them just line up. A lot of these trades or opportunities to make money line up. And so, again, it's the type of thing where just playing with these things, I've trained my mind. I don't want to say my eyes or my hands. I trained my mind to not necessarily look for them, but to see them. And there's a difference between looking and seeing. When you look for something, you can get yourself into trouble, because you can go and convince yourself and rationalize to go and do whatever you want to go and do, whichever you think you should do. And that gets into like yesterday's video where we talked about subconsciousness, and you can go and look for something. There's the reason to go short here, and bam, you're in the trade, and bam, you're now losing money because, you didn't see something, you looked for it.
Right.
So I think that's the biggest thing that's evolved in my trading anyway.
Hey, can you tell the traders, you said that you had indicators and now you don't need them, but you still see what the indicators are telling you. Can you give them an example so maybe they could follow?
Sure. I mean, well, the most recent one is the obvious one, but the most recent one was when we were playing with imbalances and order blocks. That's an obvious one. I don't need the indicator on the chart to see the imbalance. I don't need an indicator on the chart to see the order blocks. I just naturally see it. So if I'm sitting there and I'm looking, let's say I'm trying to take a DSR trade, and I see an order block there and I see a DSR there, I'm going to say, you know what? That's a good opportunity. There's a good chance I can pick up a few pips here. I'm not one of these guys with order blocks is looking to go and make 100 pips on a trade or something like that. I'm one of these guys that, hey, there's an opportunity there. There's an order block there. I can get in. I got a DSR there at the same time. I can jump in. I can get, somewhere between 3, 5, 7 pips, something like that. So that's a perfect example. I used to have that all on the chart, and I would have it there. The other one that's an obvious one, we used to go and use the HL5. And I'd put the HL5 on there and have all of the hourly closings on my chart, and just have them there. Well, the thing is about that is that what I found was that because so many closes happened, very, very close to each other, it became difficult to read sometimes because there was so many lines, one after the other after another. But having it there in the first place, it just showed me how significant that line is. And so now, what do I have? I've got my trading chart up, and then right next to it, I've got an hourly chart. And I just look over at the hourly chart, and I can just see all that. I don't need an indicator to do that. The candlesticks is my indicator. I can see it right then and there. But the thing is, I think what the indicator trained me again to do is just see how important they are and how significant they are and what price tends to do around those lines.
Right, because like earlier, I said price probably needs to get down to that 3,700, and then I said, it needs to get down to 3,710. Well, it hit 3,709 and then reversed.
Right. Exactly. And we just know that it's going to do things like that at those places. And that's what the indicators show you. Put the indicators up there, watch it. You don't even necessarily have to trade it. What you got to do is just watch it. Just watch what price does at these lines. And just get yourself trained to the point where, hey, there's a good chance that we're going to have some type of reaction at that line. And that reaction maybe it turns around, or that reaction may be that it blasts through that line. But that's still a reaction. It's not going to be ended there very long, And that 3710, you're exactly right. You look left and you just can say, hey, that's a place where it's going to have some challenges and have some problems, if you just go and look. But if you had the HL5 up there, you would see that line there, and it would be like, look at that. That's a significant line for me.
Right. Oh, I know another thing on the evolution. You mentioned that you've upped your goal and things, so because that's part of evolution. What made you do that?
What made me do that was that there were two parts of that, but the first thing was that I had a goal of 10 pips, per day, and the reality was I was getting significantly more than that, so why have a goal that that's that ridiculous? That's sort of like, going out there and having a goal to go and, get 30 points in a basketball game when your team gets, 80 to 100 every day. Why have a goal of 30, So it was the type of thing where my trading had progressed to the point where I know I can go and get this. And it's what it is. It's stretching your ability. The second part of that is what that also allows me to do is I don't have to go and trade as large of a lot size. Therefore, every trade I take, I don't need to go and have as much at risk, which means that when you're not having as much at risk, it's a head game. There's psychology there. It's the type of thing where you're not worried about, I'm going to take a loss. Yeah, that's going to happen. But if you're at the maximum that you're able to go and trade at, because that's what you need to go and trade at in order to make, let's face it, the number at the end of the day, that's the most important number, is not how many pips you made in a day. Okay? The number that's most important at the end of the day is, did you make enough money, or did you go and make your goal in terms of money on average? Now, of course, there are going to be days where you may make half of what you really want to make for the day, but there are other times that you'll make twice as much or 3 times as much even. But that's the number that really counts. Now, if I can find a way to go and relieve pressure off myself to make that number, hey, let's go do that. And there's two ways to do it. One is to either go and find a way to go make more pips, which I was already doing, so that part of the goal was satisfied. And then the second part of it is, well, you got to grow your account size. Well, I've grown my account size since we've spoken, and so that allows me again where I'm able to go and trade at a level now that's higher than I did a year and a half ago.
Yeah. Hey, did you take the Walmal trade this hour?
No, I did not. I told you earlier I was done for the day because I'd made what I wanted to make for the day, and so I've got a profile up right now from about 2 years ago, so it doesn't even look like my trading screen.
Yeah, because I just noticed prices it's about 13 pips above the Walmart line there, and 9 pips above the previous hour's high.
Right. Yeah. In fact, I would have. What I probably would have done is I would have entered probably at the 20 line, and it would have taken a little bit of heat, 2 or 3, not even like pip and a half, but yeah, that would have been a really nice trade. Honestly, I probably would have gone in, okay, and because I was watching it, and it went up about pip and a half, and then it hung out there for, I don't know, a good 30 seconds or so. I probably would have exited out and got maybe a half a pip on it. But then when it went and crossed it the second time, I would have gone in again. But I wouldn't have gotten in at 20. I probably would have gotten in somewhere around 22 or 21.5, something like that, when it cleared the previous high, and would have taken, I would have wanted to wait for that to happen. That's, that's that thing of patience, right? If you play sports, what's the most important thing, other than talent, and practice? But the most important thing that you can learn playing sports is having patience, waiting for that opportunity. And that's part of trading too, waiting for the opportunity. Don't just take care, if you know something, if it's something that you observe time in and time again, then you need to go incorporate that into your trading style. But you better make sure that you're doing this based on, some type of observation that you've tested.
Makes sense.
So, and the thing is, now, of course, if you want to be a statistical trader like I claim to be, well, the reality is, you just take every trade and you'll be on top. And that's true too. So I don't want to go and say that you can't not take every trade, because you can, but at the same time, I think you can become even more profitable if you observe certain things and you've learned things, in that process, where you can fine tune things, where you can go and not necessarily get more wins, but maybe eke out or actually take out some of the losses.
Yeah. In fact, I was just scrolling through a couple of the charts here, and it looks like we're right around the high of the opening range for the week here. We're 90 pips above the yearly open. But yeah, we're right around that high from Monday.
Right. I see that. We're very close to it.
And
that's where a lot of your indicators are so useful, TRO, because what that does is it just gives you that information at a glance. You just know it immediately because it's just on the screen. You can see it right away.
Yeah.
Now, at the same time, I'm going to go and just add a little tidbit. You still should scan through the charts, and the reason why is because I think knowing it and seeing it are two different things.
Right. But we've got a 58.3 range for the day, and no pairs are over 100. We did take out the pivot. We took out the weekly pivot, the monthly pivot, and the daily, but we still have an open pivot from the 24th.
And we talked about yesterday about how muted the ranges are. After we got off the call, the pound finally did dump a little bit, but it's still, the range was only 70, and it's like, good grief, this is so slim.
Yeah. And you know what? The fastest 15 minutes in trading is up once again. So, traders, in the comments, put down what your evolution's been over the past year or two. It'd be nice to share with other traders. Maybe somebody can learn something. So when they sit down at their trading platform, they'll realize it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.